This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
What a time to say that. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Reema and Surbi here over the next 2.5 hours. Guys, good morning.
Hi, good morning, guys. Did you know today's Hindi Divas Day? I just learned outside.
Hindi Divas?
Hindi Divas Day. Today is celebrated as Hindi Divas Day. So, Prashant, I think you need to start in Hindi now.
Hindi Divas Day?
Okay, sorry, Hindi Divas, right?
Hindi
Divas, Hindi Divas.
You know, I love, I grew up in Delhi, right? हम तो कभी भी आप जब बोले हम दिल्ली हिंदी बात करें सुरभि भी बात कर सकते हैं बिल्कुल कोई दिक्कत की बात ही नहीं है
And chant in Hindi?
Of course, chat in Hindi. You want to try?
आप बता दो रणनीति क्या है?
Reema is sitting with the two former Delhiites, so you don't want to test us over there. We're pretty happy with that.
I want to know if you've got converted from the Delhi to the Bombaya Hindi. That is what
happened.
I'm going to, test now.
Maybe some elements have creeped in, but not fully. So, so anyway, we'll get to the Hindi in just a bit. But let's quickly tell you what you need to know as we start another trading session. You've got, broader markets which saw a pretty good recovery yesterday, right? I mean, day before yesterday was mayhem for the broader market. And yesterday was important because it kind of told you whether the enthusiasm for broader market, mid caps, small caps, micro caps is intact or, it's a bit of a break. Well, it's not a break. Look at what happened. The small cap index ended about 1% higher. The mid cap index ended about 0.2 higher. And you had the micro cap index, below the small cap level, which ended about 1.5% in the green. So no problem. Absolutely. Now, this is the broader setup. I'll get to Nifty, Bank Nifty in just a bit, which, by the way, are doing well in any case. The Nasdaq has ended overnight about 0.29% in the green. So it's a positive kind of close. Dow actually ended about a quarter lower, but S&P and Nasdaq were higher. The big data point, of course, was the US core CPI numbers, which came in slightly above consensus. And we'll go into details of this one with a global guest in a bit from now. But suffice to say, if you look at the market reaction, etc., markets very quickly recognize that there is limited impact of this, even though the numbers are a little beat on next week's FOMC meeting. The pricing, etc., has not changed. And the Fed remains on track to most likely, quote-unquote, skip hiking this month, which is the meeting next week. So that's really what happened. Now, oil and dollar continue to be problem areas. Oil prices were marginally up, but they are above $92 a barrel. Actually, they're closer to 92.5 now. So far, we've kind of completely and nicely ignored oil prices and where they are. But for how long is the question? Dollar index is at closer to 105, really. So those are the two pockets. Equities are up in the US, but these are two areas which are a worry. One's very specifically to India because we are such a large oil importer, and the second, which is the dollar, for emerging markets in general. Let's get to the levels then. The Nifty, and we've put this level out since we took out 20,000 the first time, which is last Friday. The target on the upside remains 20,350. That's the equality level, just basically looking at the moves, the last two big moves that we've seen, and you get to a target of 2350. And we're actually almost at 2100 as of yesterday's close. On the way down, yesterday's low of 19,914 perhaps is a level where, always better buying on dips, and if you get those, that is. And 19,914 perhaps is one such kind of pivot and also should act as a bit of a support in the very near term. The Nifty was not the star yesterday, by the way. It was the Bank Nifty. So the Nifty Bank ended about almost 1% in the green. And people have been kind of waiting for the large caps and financials. Financials are 40% of the Nifty index for this sector to start to participate. So on the Bank Nifty, there's not very much. We are at about 45,900. The all-time high is 46,369, a couple of percentage points, and we are there. So I would say that's basically the target here. Yes, yesterday's low of 45,299 should not break on the way down if this has got to materialize. So again, you can be used as a bit of a support, as a marker below which things start to be thrown into some doubt. Mid caps and small caps, just a quick word, I think in pretty good shape, although one has to be careful, and we made this point yesterday as well. stocks which have been running up, especially the deep cyclicals, I mean, defense names and railway stocks and, so many other smaller names, but deep cyclicals, which have run up on the back of expected kind of order inflow or, the ordering cycle picking up, etc. And they're up 100, 200% in the last year and a half. I mean, I think perhaps some more time consolidation, some sideways action is possible. But the point is the broader indices have not broken the 20-day moving average. We came very close there, but did not break those levels. And we saw a pretty nice bounce back. So that's, how we're looking. Once again, I mean, large caps perhaps, and you saw that in Nifty Bank, big names, HDFC Bank, ICICI Bank, that's also the one area where there is a lot of valuation comfort as compared to the broader markets. The GIFT Nifty is indicating about a 50-point higher start. Prima.
Well, Prashant, I mean, why just large-cap banks? Mid-cap banks, I mean, mid-cap PSU, mid-cap private sector, it's been an absolutely stunning rally, right? We'll see if that kind of continues. But I just want to expand on that point on the US inflation print that you made earlier and just put the numbers out there just so that people know what that small little sort of beat was in terms of the headline figure. So let's put up the numbers. At the headline number, we had the print coming in, this is August CPI print, coming in at 3.7%, slightly higher than expectations of 3.6. Month on month, it's pretty much the same. The good news, of course, is that core CPI isn't running away in a hurry, and the market's kind of like that. So 4.3% year on year, in line with estimates. Month on month, 0.3%, slightly above estimates. And more or less, it's in the ballpark range, shade higher. Prashant mentioned, of course, that no one's expecting the Fed to do anything in the policy meeting this week. But the next one is what the market is watching out for. And right now, there's a 48, 49% sort of probability that we will see a rate hike in November. Another point worth noting in the US market yesterday, I just keep that as a marker at the back of the mind, that some of the regional banking stocks were down between 4-5%. The regional bank index was down about 2%. So it's very clear this rise in rates that's still weighing on some of the smaller financials in the US, and we have to keep our guard up when it comes to that side of the market. So just put that out there. Coming to our market, the fund flow picture, we had a net sell from the FIIs yesterday, about 1,600 crores. Half of that was made up by the DII buying. So those are the numbers: 850 buy from DIIs, about 1,600 sell on the FIIs. Speaking of FIIs, I now want to sort of talk in context of what the Bank Nifty has done, as Prashant is also saying, and that's really the market's expectation that banks are going to lead the next leg of the rally. That's already started happening in the month of September, neck to neck on the Nifty and the Bank Nifty in September. But again, if you put it in context, overall for the year, the Nifty is up almost 11%. The Bank Nifty is only up about 6.5 to about 7%. So there's a lot of catch-up to do. The question is, after the catch-up, what? Can banks really lead this market from the front? And that's where the FII number is very, very important, which has not been supportive. Let's look at the tally. And this is final data, not provisional. Final, we're actually net negative in September. We're halfway at the month, but we're still negative on the FPI inflow number. August was also on the lower side compared to this deluge of FPI money that we were getting in when the rally started. That's May, June, July. We were getting 45,000 crores to 47,000 crores on an average monthly run rate basis. So that buying has tapered off. It's negative so far in September. If banks have to perform, I mean, I think the theory is very, very simple. FIIs have to return to this market in a big way. And we know then what happens to the bank index when that happens.
No, absolutely. And did you know State Bank of India is actually down 3% year to date? So despite this big PSU rally, State Bank of India has not performed, down 3% year to date. And of course, big boy HDFC Bank is also absolutely flat year to date. But the big cue the markets were watching out for were the US CPI print and the India CPI print. Now that is behind the market. So what next? In terms of cues for the day, we've got the WPI inflation print for the Indian markets, comes out at 12 o'clock. There will be some focus on China because the debt-laden real estate giant Country Garden is approaching another deadline for bondholder voting to extend their payments. So this is going to be watched for all real estate developers in China. There is an ECB rate decision out later today. The ECB has hiked rate 9 consecutive times by 25 basis points. Will they pause or will they hike again? This will be tracked. And of course, every week we get the weekly jobless claims out of the United States. So that's going to be on our radar too. The GIFT Nifty is currently suggesting a start closer to 20,200. I think 20,180 is where the GIFT Nifty is. And if you pull up the Asian market context, most of Asia is holding up in the green. So you've got Nikkei, Taiwan up nearly 1%, but some softness seen in Hang Seng and China. Those are the two markets which are a bit subdued. But GIFT Nifty is up. That's what we're going to be tracking.
Oh, absolutely. I mean, 45, 50 points higher is what we have there. Well, so that's basically cues and what you need to know. And we'll come back to some of this as we go on with our discussions. Let's quickly tell you what's lined up here in the first half hour of the show before we go any further. So Nathan Sheets, Global Chief Economist at Citi, will join us in just a bit to discuss the setup. And that's the big voice, actually, from the global arena. Our listed top 10 stocks will come up with CNBC TV18's research team in just a bit. And Deepan Mehta of Elixir Equities will join us at 8:30 with a check of what he is watching in this market right now.
Okay, well, on equities, Dubravko Lakos Bujasov of JP Morgan says equities are up 16% in 2023 so far, mostly on multiple expansion, while real rates and cost of capital are moving deeper into restrictive territory. History suggests this relationship is becoming increasingly unsustainable, posing risk to the equity multiples, especially since earnings expectations are already facing a high hurdle for 2024.
Okay, we've got another one coming in from Amish Shah of Bank of America Securities, and they're saying, well, they see a muted 2% upside to Nifty in the near term or until the end of the year. Although they would look to buy large caps and potential dips, they expect small and mid caps to correct as the rally has been mostly driven by valuation expansion. Most sectors now trade above one standard deviation valuation, and earnings growth estimates are stretched. In the near term, Bank of America sees pockets of opportunity within large cap financials, but believes the rally within IT, metals and utilities is unwarranted, and they're underweight these sectors. They also think that industrials and autos now offer limited upside in the near term.
Okay, well, let's move to some of the money market views that we're getting in. And here's a call on the rupee from Parul Mittal Sinha of Standard Chartered Bank. She says the rupee was trading in a range last week below the 83 level on easing in Chinese yuan and dollar selling by PSU banks. She expects the USD INR pair to trade in a range of 82.80 to 83.20 over the next week and prefers buying on dips as elevated US rates continue to support the dollar.
Well, on bonds, we've got Parul Mittal Sinha, Standard Chartered Bank, saying that domestic rates eased on index inclusion optimism and lower than expected CPI data. Next print tracking sub 6% inflation is a near-term positive. Parul expects the 10-year benchmark yield to trade between 7.1 to 7.25% range, with a focus on ECB, Bank of England and FOMC. She adds US rate moves post the higher than expected CPI release will also be in focus.
And we've got lots of stock-specific action to track today. We'll do that in just a bit in our special Top 10 segment. We're looking at Bombay Dyeing, Suven Pharma, Bajaj Healthcare, IRCTC, NBCC, Adani Enterprises, Cummins, Lloyd Steel, Kirloskar Ferris that are on our radar on the back of positive news flow. And the lone stock in the red could be Interglobe Aviation.